Here's your welcome aboard. Joseph James here, schooltrade.com, Sideways Markets. It's June 7th, 2011. Here's your live and recap. Now again, I want some feedback from you guys regarding this brand new format. I'm changing things around, trying to make it easier for you guys to use it. Post your feedback below this video. There's a comment section below the video. You can post your feedback there. I would love to get your feedback. So what happened today? Tuesday morning. Now, of course, yesterday we had a very similar day. Yesterday morning, no major news. We took all of our trades from 10 to 11 o'clock yesterday, made a bunch of money. We're back here again this morning, Tuesday morning. Same thing, no major news today. Now, without major news, we knew, of course, we're probably going to get a late start. But then we also looked at our news later on today, and we realized we had Ben Bernanke at 3:45. Now, Ben Bernanke at 3:45 means, with no news in the early morning, late start, and also means an early finish. An early finish because we assume people be waiting for what Ben Bernanke will say, right? What is the Bernanke going to be talking about at 3:45 today? So major money managers, remember, if you're a Goldman Sachs trader trying to trade 1,000 lots, you can't trade now and then get out of that position before Bernanke speaks. Or remember, tomorrow is OPEC. We get an OPEC meeting tomorrow, right? They're discussing supply and demand on crude oil. That's the second thing we know about tomorrow. Okay, so 3:45 today, Bernanke speaks. Tomorrow we get the OPEC meeting. Now that will also mean major money managers won't be able to get in today and then get out before they figure out what OPEC is talking about tomorrow. And then one more thing. We got inventories tomorrow. Tomorrow's a Wednesday, crude inventories. So there are three reasons right now why we knew it would be a slow start and an early finish. What that basically tells me is, be patient at the open, be aware of your time so you're not trading too late, and don't force trades late in the morning. And above everything else, keep an eye on the personality, because the personality today, that was our big concern, right? Our big concern today was people know exactly where crude should be going. Now, if everybody knows where crude's going, it probably won't go there. Why? Why is that the case? Well, remember, we had the last 2 weeks, manufacturing sector has been shrinking here in the U.S., consuming less crude oil. 4 weeks ago, we had all-time highs on crude, and of course, when all-time highs hit, people stop filling up their gas tanks. So there's less demand, and then now we're hearing rumors that OPEC's going to be increasing supply in tomorrow's meeting. Not to mention the fact, look at this big bear channel here. So my big bear channel on the crude. Over 1, 2, 3, 4, 5. This is the 6th day. And we joked around this morning by saying, even if you didn't know about any other fundamental aspects, right? The meeting tomorrow, Bernanke today, inventories tomorrow. If you didn't know about any of that, if you just looked at this chart, you would say, well, it's probably going to keep dropping. So it didn't matter. It didn't matter what type of trader you were. It doesn't matter what your level of knowledge is. Everyone knows crude should be dropping. So if that's such a popular opinion, why were we so concerned this morning about the price action on crude? Why was I so concerned, right, about the sentiment, right, the personality? Because remember, when everybody knows the same thing, the market tends to price it in by itself. So we had reason to believe today that the only reason why we were below 100 even was because of this potential news tomorrow, was because of this inventories tomorrow, was because everyone knew crude is dropping. So now I have to put my thinking cap on. If everybody knows what's going on, what's going to happen? We're probably going to see fake out breakouts. The professional traders out there are going to let our rookie traders out there try to sell those lows so they can take your money, wait for price to rise up, and then sell the retracement back down. So professional traders know on a day like today, they make a business of taking the rookie's money by trying to sell those lows. We had reason to believe that the price had already priced in this excess supply in crude, and that's why price was dropping. So the first thing we said was we had 3 red flags: Bernanke, inventories, and OPEC meeting tomorrow. Because of that, very difficult to tell if we'll have a lot of volume, very difficult to tell if the lows can be trusted. And so we went through our motions and we planned our day ahead, knowing that we got to be careful trading crude today. Now we watched gold. Gold was very flat today, so we stayed focused on crude. We then went to the dollar. And on the dollar, what do we see? We saw a range, a sideways range, and a sideways wedge. We were at the lows of that wedge. But then we zoomed in on the $1.13 range and we realized it was going sideways. So the dollar at the lows of the wedge, but going sideways, it was called a transitional area on the dollar. Now, when I say a transitional area in the dollar, what I mean is the dollar had likelihood of going higher at the lows of the range, likelihood of dropping because the dollar was in a downtrend, and we also knew there was a third scenario, the dollar may go sideways. So we used those three scenarios, right? Dollar may rise, dollar may fall, dollar may go sideways. So think of those three scenarios and look at the crude. And what do you see here on crude? What did we get on crude? First of all, we knew we had that bear channel. Second of all, we had some sideways ranges. One right there, one right here, right? We defined the sideways ranges. Third thing, we have your price channel. Right? Here is your price, your price wedge. So, think about this. Forget the dollar for a second. What does a bear channel tell me to do? A bear channel tells me sell retracements. Right? Sell retracements as we get lower lows. What does a sideways range tell me? A sideways range tells me buy the lows, sell the highs, avoid the middle. And then what does the wedge tell me? What does that wedge tell me? The wedge tells me buy the lows of the wedge, sell the highs of the wedge, avoid the middle of the wedge. At 9:35, we drop below the previous lows, wave 1, wave 2, and then price reverses back above the previous lows. So we fail at the previous low or fail below the previous low, but in the process, I took 4 trades and made almost $1,000 on it. So again, we start off breaking below the previous low of day. Now remember, whenever I drop, whenever price makes a new lower low, I'm always looking for what? Well, sell a retracement, but I'm first going to look to buy. What a better idea than to buy at those lows so I can take the profit off at that wave short and then bam, right, finish the move off. So it's a wave pattern short that begins with a 2-step pattern long. Now follow me over here. This is that example where I wanted to show you guys how I got into this trade right now. Okay, here's my 4-range chart. And so of course, we break through the previous low of day, we break through the low of day, right? Mark up your swing high, and there's your buy opportunity there on a 4-range chart. Tough to see it here, obviously, on my 13 range, but that's how I got into that trade on this 13-range chart on crude.